And welcome to the halftime show. Let's meet our starting lineup for today. Pete Najarian is co-founder of Option Monster. Josh Brown is CEO of Ritholtz Wealth Management. Stephen Weiss is managing partner of Short Hills Capital, and Mike Murphy is the CEO of Rosecliff Capital. And in honor of Veterans Day, we're also joined today by Navy veteran and Super Bowl champion Phil McConkey of Academy Securities. He is in San Diego for us today. We're going to get to Alibaba's record-setting Singles Day in just a bit, but we do kick off our show with stocks hitting new highs yet again. The Dow, the S&P, the transports looking to add to their intraday milestones. Also today, the Dow going for 6 straight up days, something it hasn't done since June. A testament surely to the power of the recent rally, as stocks are now up 10% from the mid-October lows. Josh, industrials, financials, healthcare, tech, these sectors keep hitting new highs every day.
Yeah, Scott, I tend to focus a lot on things like breadth and market internals, because if you're trying to gauge what the real trend is beyond just price, you want to get a sense of what most stocks are doing. And as I've been talking about on my last couple of appearances here, it's all systems go. In the S&P 100, which are the mega caps, the S&P 500, you have the NASDAQ 100, the Qs. You've got advanced decline lines at new all-time highs, above and beyond the prior September high for AD. Now you look at the mid-caps breaking through today. You look at the Russell 2000 advanced decline line strengthening. And what that tells you is that leadership is spreading out. It's not narrowing. And that's not a be-all, end-all, but I think it's very important. And I think it lends credence to this idea that people want to own stocks more than they don't. Bottom line, price is now being confirmed by what the internals are telling you.
Pete, what is the catalyst for the next leg? Buybacks returning now that earnings season's coming to an end? Is that the next thing that's going to carry this market higher?
Yeah, I don't know necessarily it's buyback, Scott, but I think when people start going through all of these various reports, the people who've been on the sidelines, yesterday we talked about millennials not wanting to invest in the stock market. I actually think sooner or later down the line, not necessarily to the end of the year, but at some point, that money has to go into the market, because I think guys are going to be missing it the longer they've stayed out. And the protection levels we talked about all the time, we're back in those areas once again where we're well underneath the 50 and 200-day moving averages for the volatility index. That means it's time to buy some of that protection at extremely cheap levels once again. I look at these financials, though, Scott. I think that is the leg. Today, they hit another 52-week high with the XLF. Goldman Sachs, JP Morgan. The way JP Morgan's been able to shrug off the bad news and a downgrade, that says a lot about that company and what people's thoughts are on that company going forward.
Phil, on this Veterans Day, we're grateful, of course, for your service and that of your colleagues. It's so good to have you back on the show, so welcome. Curious for your comments on how you see the market.
Thank you so much for that, and thank you to all those veterans that are serving currently and that have returned and are transitioning back to the workforce. But Scott, I think that we've got some strong economic tailwinds in the equity environment that we're in now. We've got strong earnings. We've got declining energy costs, which are down crude oil is down about 21% so far this year at a 3-year low. We've got worldwide central bank intervention. So why fight the tape in that scenario?
You get concerned at all by this drop in crude? I mean, we're seeing this decline, north of $75 now. It's a 4-year low. Certainly it helps when you, me, and everybody else drives to the gas pump. But what about concerns about real demand?
Well, we've talked about this bear market in crude oil, and you've got environmentalists that have asked for or wanted a reduction in demand of energy, and in that respect, it's good for the environment. But I think for the consumer, we're coming into the holiday season, and costs are down almost a quarter, so that's money back into their pockets. It's almost like a big tax break for the consumer at just the right time going into this buying season, which could help stocks overall.
Steve? Phil makes some good points.
He does. And look, I agree with him about the market. And it used to be, okay, the U.S., we're, best house on a bad block. But the truth is, the reason why I like the market is because we're the best house, and we have been the best house in terms of the economy.
Maybe, we're the only house on the block.
Where else are you going to go? Right. I mean, that's the next catalyst. There's nowhere to go. Bonds rates will back up. Emerging markets, some are good, but ones that depend on crude, like Mexico, you don't want to be there because it's cutting their revenues. I don't want to be in Europe yet. I don't want to be in China. You surely don't want to be in Russia, but I do want to be in the U.S. So it's not by default, it's positive. In terms of crude, Phil, you're dead on. It's going to be a huge positive for the U.S. And the best thing about it is I don't believe the decline is driven by a lack of demand. It's driven by more, like any other commodity that has, demand and supply. It's driven by supply. So I think it all sets up pretty nicely in the U.S. Can we have another 5 to 10% correction? Absolutely, but I don't think we have it near term.
Murph, these months are typically pretty good for the market between now and the end of the year. What do you think?
Absolutely. I think the market is poised to continue to move higher, but I think you're going to get some pullbacks, as Steve just pointed out. Phil brings up points about energy, the cost of fuel. That's a major, major positive. However, we've gone from 1820 on the S&P up to where we are today, about 2040. So 220 S&P points. You're going to get some pause in this market at some point. Like to point out a name, Facebook. Facebook came out, had a great quarter, and that stock's been stuck down here about 10 or 11% off of its all-time high in the low to mid 70s. So look at some of these technology names. Look at Apple kind of taking a pause. Look at Facebook taking a pause. Today you have Alibaba finally selling off a little bit. So I would want to have a list of names you want to own. Look for some weakness in the market and buy them. I think overall we go higher, but we're not going to go straight up. There will be some back and fill.
Phil, are there particular areas of the market you like better than others?
You know what? When we talk about the overall market, and I think that we've got a great idea when we talk about companies and the corporate tax rate at 35%, one of the highest levels in the world. I would propose, some harmony in Washington. Let's have the president, Congress come together, agree on something by lowering the tax rate, maybe down to 15 or 20%, with the stipulation that the companies be required to reinvest those savings back into their company specifically for job creation, and the majority of those jobs would be required to go to returning veterans. So I think in that scenario, companies are happy, the shareholders are happy. We're not talking about a dividend or share repurchase program for those companies with those tax savings. It's engaging the military veteran community to help their companies grow. Taxpayers would be happy, and you're bringing back a highly skilled, trained workforce to integrate them back into the private sector. And I think what we should do is lobby this. I'll get Pete, his brother, we'll get some washed-up athletes. We'll go march on Washington and ask the Congress and the president to push this thing through so that we all could be happy. Pete, what do you think?
I totally agree with, and Scott, this is something we talked about after the elections recently, right? I mean, one of the things, Phil, that I was talking about was, as the Republicans got themselves positioned in there, one of the first areas that I would attack if I were them would be going right for exactly what you just talked about, repatriation. 39%, if that number could be lowered and you actually tag something along with that to have job creation, those that are the biggest right now, overseas money that could come back here, pharmaceuticals and technology, that's why I think I'm excited so much about some of those specific sectors in the market right now, because I think at some point that will get done and we will get some of that job creation, Scott.
Phil, before I let you run, I'd be remiss if I didn't ask you what this day means to you.
Well, Scott, you can only imagine with the sacrifices and the courage of all those that are returning. These are post 9/11 veterans who joined the military after we were attacked on 9/11, after the war started in Afghanistan, after the war started in Iraq. I joined the military after a war ended. I can't compare my service to these great heroes and patriots. And I'm really proud of what Wall Street and the financial service sector is doing to engage our military veterans and their families by offering and helping them in jobs. The 100,000 jobs mission on Wall Street that was created by J.P. Morgan, which is now a 200,000 jobs mission. The Veterans on Wall Street initiative. A former banker, Sid Goodfriend, started American Corporate Partner by taking Fortune 500 companies and offering executives mentorships to returning veterans. Today, they're announcing more companies, 500 mentorships available for returning veterans. You've got the Wall Street Warfighters that was started by General Peter Pace, the 16th chairman of the Joint Chiefs of Staff and a Naval Academy graduate, I might add, that helps veterans get opportunities on Wall Street by giving them opportunities to get their licenses. 95% of the graduates have gotten jobs in the financial services sector. I am so proud today as I sit here for our veterans, their families, and what the financial services sector has done by taking the lead and engaging this courageous, patriotic, wonderful community, bringing them back to our country to help us grow as a nation and help us to more prosperity, just like the World War II greatest generation did before them.
Phil, we're proud of you. We're proud of everyone else, and we'll look forward to having you back soon. Thank you so much.
Thank you, Scott. Thank you, guys.
All right, Phil McConkey. Later on in the hour, by the way, do not miss Medal of Honor recipient Colonel Jack Jacobs, who has some advice for employers when it comes to hiring our veterans. We're going to do the Trader Blitz in just a second, but give me a quick comment, because we touched on at the very top about this record-setting day for Alibaba. We're going to do much more in a few minutes on it, but